see the millions in the mirror. The night is darkest for the brightest star, and now I see the moon. The moon on this night keeps on calling. I'm fine when they dip, now I'm falling. I'm falling, I'm falling, I'm falling. I'm fine when they dip, now I'm falling. Yeah. I take a chance even if I doubt it. It's better pay me for the ones that try to. So when I make it, they just get knocked. Experience breaking, so I better bottle. I gotta do what they won't do. I gotta own what they won't pursue. I gotta know and I gotta move. I gotta show and I gotta roll. On this night keeps on calling.
Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at Tokenmetrics.com.
All right, crypto family, happy Friday. Today we have the pleasure of having one of the great projects we've been keeping tabs on, Benchmark Protocol. We have the COO, the Chief Operating Officer, Kurt Uhler, here for an AMA with the audience. We'll go through the background of the project, their roadmap, their vision, what they're working on, what they're trying to solve in the crypto and DeFi space, the value add, and have you ask any questions you have. We'll be taking questions throughout all of different platforms from YouTube, Twitter, Periscope, Facebook. Just post questions down in the chat and we'll pull them up. Kurt, how are you? Welcome on the show.
Hey, Ian. Thanks for having me. Doing well. How are you?
Good. Just survived crypto apocalypse here in Austin, Texas. Pretty much we had no power for a few days, but crypto's pumping. Bitcoin at 50K. Ethereum is almost at 2K. Can't complain. Life in crypto is great. All right. So welcome on the show. For people who maybe don't know who you are, do a brief introduction on yourself.
Sure. Hey, everyone. So I'm Kurt Uhler. I'm the COO of Benchmark Protocol and super happy to be here today to chat about the project and hopefully answer any questions that you have. And, feel free to ask anything. I'm an open book and want to answer anything I can about our project.
Great. And disclosure, prior to even starting the show, I am an investor in Benchmark Protocol. This is a free interview, not paid. All the opinions here are my own. This is not investment advice. Crypto investing can be risky. Always do your own research. And yeah, with that being said, so let's kind of maybe begin with your backstory. How'd you get into crypto?
Sure. So, I think like a lot of people, it's probably going to be a similar story. I got into the space in late 2016, early 2017, made some money, lost some money, but really learned a lot about the space. And it gave me an appreciation for the opportunity that was there in crypto and that would come in the future. So, ultimately took a little bit of a break from investing when the bear market came, and ultimately back in early 2020, started diving back in and investing for myself personally. So that's how I got into crypto and eventually linked up with some of the founders of Benchmark Protocol and joined the team. And here we are today.
What year was that?
So we actually launched the project in November 2020. So we're approaching our 3-month birthday. It was November 24th. So it's February 19th. So I guess in 5 days we'll have to have some quarterly celebration or something. But that's when the project launched. So I linked up with the team just before the launch, got involved then, and have been helping the project grow essentially from the beginning.
All right. So for maybe people who don't know what Benchmark Protocol is, can you kind of go through the overview on what the project is, what you guys are trying to solve?
Sure, happy to do it. And this might be a little bit long-winded because it's a little different than some other projects. But
yeah, go ahead. We have all the
know,
time in the world.
great. So it's a supply elastic token or a rebase token. So what that means is that we adjust our supply daily, and we do this algorithmically based on really an algorithm that has two main inputs. The first is just a price differential calculation from our peg. So our target price for the token is 1 SDR. The SDR is a basket of 5 global currencies and is equal to approximately $1.40 in US dollars. So it's important, in my opinion, and in our opinion as a project, that the peg is a diversified currency. Most projects now have a 1 US dollar peg. So, whether that's a stable coin or other elastic coin, they're pegged to $1. And, we think that being pegged to a basket of 5 currencies is very important, especially given, frankly, all the printing that's going on in the US, but also just it seems prudent to have some diversified currency risk there with your peg. So that's the first part of our algorithm. If the price is below the target of 1 SDR, we will decrease the tokens across all holders. And if the price is above that target, we increase the token balances across all holders. So that's just a simple rebase mechanic, and that's similar to other rebase tokens like Ampleforth, which is really the pioneer in the space and the biggest project in the space. So the second component is that we incorporate the Volatility Index, or the VIX, into our rebase. And the VIX is an index that tracks option premiums for 30-day forward-looking S&P 500 options. So essentially, it's used in traditional markets and traditional investing as a fear indicator or fear gauge from the market. So if the market expects more volatility, the VIX will increase. And we use this in our algorithm to provide an indication on whether a further increase is needed in supply if the market is going to expect further volatility. And this is very important for an elastic currency and one of the main differentiators of our project, because elasticity is great, but you must make sure that you're elastic enough to account and mitigate any liquidation events. So the main concept here really is that benchmark protocol and the MARK token is elastic and non-dilutive. So everybody's affected equally by these rebases, and the rebase itself isn't changing the value of anyone's holdings. So it's simply rebalancing the supply and the price. And then once a rebase occurs, it's really up to the market to take it from there and determine the price action until the next rebase. So we rebase every day between 4:15 p.m. and 9:15 p.m. Eastern time. So once the rebase happens, until the next rebase, the coin is traded and the price will be fluctuating, up or down depending on the demand for the token over that period. So unlike other investments, you shouldn't necessarily only rely on the price for tracking growth, but you should really look at market cap as well. So that's really the fundamentals of our token. We have some other nuances really with like how we apply the rebase in terms of smoothing periods and how we implement it. But I would encourage anybody who wants to read further into the details of that algorithm to head to our Telegram group and ask, or you can go on our website and you can read some of our documentation there that outlines all the details.
All right, well said. So I know first time I heard about the project Benchmark Protocol, and I was going through the use case, and it just made so much sense to me. And I said, how come nobody else has thought about this? Because I was kind of late on the whole rebase coin speculation last year, because I didn't really see, I mean, we definitely liked Ampleforth from a code review perspective and technology perspective, but we felt there was just too much hype. But after going through Benchmark and seeing how you guys were using the VIX and the SDR, it just said, okay, you know what? This really does seem like an actual hedge versus market risk. So can you kind of maybe speak to how people would use this cryptocurrency to hedge versus risk?
Sure. So I think hedging, as you touched on, is a important use. And the way we do that is really just creating a volatility profile for the token that's different and unique, right? If you are very close to the crypto markets, you'll know that as Bitcoin goes, so do many altcoins, if not all altcoins. So everything is very correlated to the broader Bitcoin market. And we really want to decouple from that the best we can. And we felt that importing a metric like the VIX, which is a traditional capital market metric, is helpful in doing that. So that's really one use case of the token. And that use case is realized simply by holding the token. You don't even need to do anything to I guess, use the token in that way. But that's one use case. And I think that's going to develop a lot more as, decentralized asset management or portfolio management protocols continue to emerge. And as more institutional money and more sophisticated investors get into cryptocurrency, I think that will be an important tool, whether it's through our token or through other tokens that emerge. You have to have a way to hedge risk. You can't go all in on a market and just not have a way to trade it without using derivatives of sorts in case the market's going to take a turn. So it's important to have assets you can hold that can benefit your portfolio. So that's from a asset management and a hedging perspective, that's one use case. And then I think, from a more broader use case, what we're really trying to do is create a medium of exchange that is better than Bitcoin, for example, or dollars as another example, right? We're elastic and we're non-dilutive, right? So if you start thinking about how dollars work, when the Fed prints money, that's a dilutive event. Everybody becomes poorer when the Fed injects dollars into the economy. So we're non-dilutive. Anytime we inject tokens into the ecosystem, everybody benefits equally. So inflation and deflation are fairly applied. And why that's important too is when you have super volatile prices, like for Bitcoin, for example, it's hard to price goods in and denominate them in Bitcoin. So goods or contracts or debt or insurance or anything like that, it's hard to price in Bitcoin. So what you need is something like a stablecoin, and stablecoins have really filled that role for the most part in DeFi and the broader crypto space. But we think that the MARK token is an alternative to that stablecoin, because not only can you hold it and accomplish the same things in terms of denoting contracts or debt or anything like that with a targeted price, right? Since we're targeting $1.40, you can generally understand that one MARK token will be worth $1.40 in the long run. Also, your portfolio can grow while doing this. With stablecoins, if you held a portfolio of $1 million worth of stablecoins, it's going to be worth $1 million worth of stablecoins. But if you hold a portfolio of MARK tokens and you use them like stablecoins, that has the opportunity to increase or decrease in value over time as well. So it just has a much broader use case, I think, within the broader DeFi landscape than, say, a traditional stablecoin.
Now, what would you say to people who say that this seems like just printing money out of thin air, right? How can people keep the price backed or pegged to something?
Yeah, well, I guess what I would say is that's the same thing the government does. They print money out of thin air. So it's not much different than that. But I mean, there's different models, right? There's collateralized models for stable coins. There's algorithmic models for stable coins, and then there's rebase algorithm models for rebase tokens as well. And I think there's pros and cons to everything. And in many ways, collateral is a con. When you're looking at stable coins. Mm-hmm. If you think about collateralized stable coins, the way they're issued is they take collateral in the form of other tokens, and then they issue stable coins in exchange for that. So what happens if all that collateral overnight decreases in value 50%? That's a big problem, right? If you then want to go turn in your stable coins and get your collateral back, what happens then? And that's, liquidation events like that's exactly what happened in March when we had the huge dump because of COVID. And so actually, it's our opinion that models without collateral are actually better and superior than collateralized models. So that's one of the reasons we chose to go that route.
All right. So what's the upcoming roadmap for the project?
Yeah, so I mean, we're working on some integrations. If people have been following us, they'll know that we made an announcement earlier this week that we integrated with Polygon, so formerly Matic, and that's really a first step for us in interoperability. You know, while it is a layer 2 solution on Ethereum, the way it works really is similar to a cross-chain integration. So we're starting that, and we think interoperability is pretty important in the broader DeFi space to make sure to take advantage of all the benefits of all the different ecosystems out there. So that's a start, and we're exploring new partnerships every day in that regard. I think one of the biggest things that we're trying to do, and that's really important, and I think differentiating for us amongst our rebase peers, is that we're building our own lending marketplace. So we're building a peer-to-peer marketplace where we're going to allow users to borrow or loan out tokens on a peer-to-peer basis, fully decentralized. And we'll have some incentives to utilize the MARC token within that ecosystem. And we're still in a testing phase. We'll ultimately roll this all out on a testnet basis here in the coming, I would say, quarter or so. But we think that's really important because to date, there haven't really been a ton of integrations with rebase tokens. So we want to prove that that's possible and that that's a useful use of our token, really, in the greater lending marketplace. So we're going to build our own. That way we don't have to worry about integrations. But at the same time, we've also developed what we feel is a pretty unique solution to this. As many people probably know, it's tough for rebase tokens to get on centralized exchanges. It's tough for them to integrate with other projects. But we've developed a solution where we have a single asset staking model that issues a second token in exchange for staking your mark. So it'll issue a token called XMark if users stake their mark tokens in our platform. And that XMark token is actually not going to rebase. At the same time, it'll maintain a representation of your share in the mark ecosystem. So the underlying representation will, of course, rebase, as every mark token will always rebase daily. Mm-hmm. But the XMark token, if you hold 100 XMark, you'll always hold 100 XMark. Just what that will be worth when you go to redeem it for mark, that'll change. So what this allows us to do is seamlessly integrate a non-rebasing token into platforms that would otherwise have to really build out the infrastructure to support the rebase mechanism. So we think this is actually very, very, very important for us to help us integrate and grow fast because we don't have to worry about back-end development for some of these other platforms to accommodate us. We can accommodate them by just using this as a solution. So those are really our main
own ecosystem.
Say that one more time. Sorry.
So in a way, you're basically building your own ecosystem around the protocol and the cryptocurrency.
Yeah, we are, and I think there's a way to grow really big simply by being a rebase token, and that's great. And we think that there's a lot of value in that, but we think there's even more value building an ecosystem that utilizes that token and utilizes that technology and proves that it's of value to the cryptocurrency market and even to the broader economy. So that's really our goal. But also we realize we are going to have to integrate with other ecosystems, which is why we've created that XMark token that doesn't rebase to really just allow us to spread as much as we can.
All right, sounds good. Let's actually take a few questions from the audience here. So if you have any questions, just post them in the chat. So actually, first person on the show was AMZ, I believe. What's up? Why does Avani? How are you? Thank you for the kind words. Okay, let's see here. First question. Lots of fans here for the project. Okay, so Soifrey says, isn't this what Facebook Libra was planning on doing? So maybe kind of talk about Facebook Libra and also maybe Amplify and the whole competition and landscape and what you think Mark brings that's unique or different.
Yeah, so I think Libra was trying to use a basket of currencies. Yes, not really super familiar with how they were going to actually peg certain prices, but yes, and we also are aware that actually MakerDAO was at one point exploring the idea of utilizing the SDR as a peg as well. So we know there's a lot of thought around this, and we've seen various projects come out that all have different pegs, and there's pros and cons to those projects. I think what you have to be careful of is you don't want a peg that's moving. First of all, that's problematic in and of itself, or I should say moving often, right? We're ultimately going to inflation adjust, as we're going to do it quarterly, and we've only been rebasing actually since end of December. So we're coming up here end of next month where we're going to, ultimately adjust our peg for inflation and also for the relative weights of the 5 currencies within the SDR. But it's important to have a stable peg for a period of time. Other projects have come out with dynamic and moving pegs, and that is ultimately not ideal, because not only do you have to perform well relative to your peg, you also have to perform well relative to the assets underlying your peg. And if your peg is moving up, such as if you're pegging a value of something else that's volatile, that can be troublesome. That said, there's so many currencies that peg the dollar, Ampleforth being the pioneer in the space, and empty set dollar and other algorithmic coins that peg a dollar. We really think it's very important to have an alternative there. So to answer the question, yeah, it is a little bit like what Libra was doing, just from a target price perspective, but I'm not sure exactly their technology behind how they were going about doing that. And I think ultimately that hasn't happened. So we'll wait and see if they come out with some other solution there.
Okay, question here from Gary. So if we don't stake, then the mark tokens we hold will fluctuate in price and in quantity.
Yeah, so on our website, we have 2 different ways for users to earn yield. So we have traditional farming through LP tokens. So we have 3 pools. We have a Mark ETH, Mark USDC, and Mark Wrapped Bitcoin pools. So we have those 3 pools, and those pools, spit out anywhere between 100 and 200% APY at the moment. So users can stake their LP tokens, and those LP tokens, all the mark within those LP tokens will always rebase. So the rebase impacts any mark held in a wallet or a smart contract or anything like an LP token, anything like that. The actual mark will always rebase. And then the other option on our website is a single asset staking model, like I mentioned earlier, where users stake only mark and they receive X mark in exchange for that. And the yield is quite a bit lower on that, because it's single asset staking models not subject to impermanent loss or other risks associated with liquidity providers. So what happens there is the number of X mark will never rebase. So if you stake and you receive 100 X mark in return, you will always own 100 X mark. But when you go to exchange that X mark back for mark, the amount of mark you will get back is a rebased amount that's subject to any rebases from the time you staked to the time you withdraw. So the underlying representation of mark will always be affected by rebases.
All right, thank you. Okay, so Niall says, can you expand on your affiliation with Matic or Polygon? What exactly are you guys doing?
Sure. So we're bridging our XMark token, actually, to start. So our XMark token will be bridged to Polygon. And I guess, in terms, maybe it's easier to just say what the ideal outcome of that is, right? We want to be able to have users be able to trade XMark with low cost and fast transaction speeds. And obviously that's an issue right now in Ethereum-based DeFi projects. The gas fees are very high, and it's in some ways stifling growth of many projects because it's hard for smaller users to justify acquiring a share in a project when maybe they want to acquire 50 mark tokens and they're going to have to then pay $50 or $60 in gas. And we think that that's obviously not going to be that way forever, but in the meantime we'd like to roll out a solution where users can acquire a share in the market without having to do that. And we think Polygon is a good solution for that, because that's exactly what they're built for, is scaling and lower transaction cost transactions. And so our XMark token is bridged there. Everything's already in place. So once a DEX or some other type of project rolls out on Matic that we need to integrate with or want to integrate with, all the infrastructure is already there. And it's simply just getting ported into the network and going from there. And if you want to learn more about the technical, I'm not the best person to ask about the technical aspects of that integration, but we have an amazing tech team that can certainly answer any of those questions.
Is there a timeline on when that would be live already?
The bridge is done. So it's at this point, it's simply finding projects now to partner with that are on Matic and then allowing for our token to be traded or used in that ecosystem.
Okay. People are asking a few questions regarding your advisors. I think CoinShares and DataDash. Could you kind of maybe speak to your early backers?
Sure. So we have a great group of advisors. I'll start with we have Tom Bean at BZX. We have Ajit Tripathi at Aave. We have and he's formerly at Binance. We have Michael Burris, the COO of Ren Protocol, and then Nicholas Merton, DataDash. So obviously a YouTuber and very influential marketer in the space, and he's been great. Since they asked specifically about him, he's one of our newest advisors, and he's helped us quite a bit with marketing and giving us some advice and making quite a few introductions, not just on the marketing front, but to other projects, and that's been amazing. And he's been had a huge impact on our growth, and hopefully will continue to have a huge impact on our growth. And then, it sounds like somebody asked the question about CoinShares and Meltem. She's more of an investor in the project herself. So we're not in any way affiliated with CoinShares, but Meltem has, invested in the project, and she gives us, her own personal opinions occasionally, and will tweet about us occasionally, and that's awesome. But, you can see on her, she discloses all of her investments, and we're listed there. And she's, I think, just really sees the value in our project and wanted to be involved in ways she could. And that's how she can be involved. And, she works for a large, CoinShares is huge, and they have certain disclosure rules and things like that, and compliance rules. So she is not, an advisor for us. She's an investor in our company.
Is that as an equity investor or as a token investor?
Yeah, token investor. We don't have any equity investors. We had fair launch, so we gave away 9% of our ecosystem when we launched. You could farm mark tokens with non-mark pairs. You could farm with Chainlink Ethereum pairs. You could farm with. We offered 20 different pairs that users could farm our token, and ultimately gave away 9% of our ecosystem over the first month. And as you can imagine, our price dropped quite a bit when we did that. But that was important because we don't want to be classified as a security. We didn't solicit any investments, right, from anyone in terms of venture capital or anything like that. We didn't have an ICO. We didn't have an IEO. So there's no way for investors like that to A, dump on our community, which is important, and B, no way for them to, for it to be construed as us soliciting investors from a securities perspective. So both of those are very important for our long-term growth, whether it's integration with exchanges or just compliance in the US. So that's kind of our genesis there.
And speaking of that, how do you feel about the regulation of cryptocurrencies in the US, right? Because it's kind of been in a gray zone, right? So what are your thoughts on that? What do you think could be improved, especially with the changing of the guard with the SEC?
Yeah, I mean, my personal opinion is that I would prefer no regulation. I'm just more of a free market. That's just my outlook on everything, and that's obviously part of the reason why I got involved in the first place in this space. So, I think ultimately it's inevitable, though, as the technology is more adopted and the currency becomes, whether it's Bitcoin or whatever, becomes more mainstream than it already is. Ultimately there's going to be regulation, and I think for us to get to the next level as an industry, that is going to have to happen, really. And banks are going to have to, whether it's through stable coins or through custody or however they plan on doing it, ultimately it's probably a good thing in the US. But I'm just not, it depends how that is actually done, I think is going to, my answer might be different after that happens. But I think at the end of the day, it's a necessity and something that will help us grow eventually. But, it all depends how they do it. So yet to be determined.
Okay, so to kind of venture far into the future, so Bitcoin today just hit $50,000 and crossed, Bitcoin is now over $50,000 and crossed $1 trillion. And Bitcoin is meant to be now a store of value. That's basically its main use case, digital gold. But in the last 1 year or so, we've seen all these rebase coins really try to go after Bitcoin's use case. So do you think this is something that's feasible? Let's say 5, 10 years, 20 years down the road, where all these algorithmic rebase coins could possibly catch up to Bitcoin, or maybe even surpass Bitcoin and take the throne of store of value as a cryptocurrency?
I think theoretically it's possible, but it's probably unlikely. I think, the end goal, sure, would be to have a rebase token, specifically ours. That would be nice. Become, become the currency that, is wins out. And I think if you think about fiat, right? Fiat is elastic and dilutive, right? So you can change the supply. Nobody really reduces the supply, but you can increase the supply of fiat. So it's elastic, but it's dilutive. When that supply is increased, it's dilutive. So fiat has that as its fundamentals. Bitcoin is inelastic, right? It has a fixed, number of tokens, and non-dilutive. So if you take the best characteristics of both, it's being elastic like fiat and non-dilutive like Bitcoin. And I think that's what we see the value of our token being, is that we take the two best characteristics from each of those and try to create a functioning token or currency with that. And so, ideally, it would be great for mainstream adoption, of our token. But I think for that to happen first, Bitcoin is going to have to be adopted and become even more mainstream than it is now. I mean, if you really think about it, $1 trillion is nothing. I mean, Apple's 2-3x that, right? And that's just one company. That's not a global currency or a global store of value. So, I mean, Bitcoin, in my mind, has extreme upside still. And I think that has to happen first. And so once that happens, we'll see where we're at. And, maybe we've closed the gap a little bit by then, but I think we've got a long way to go for that to happen.
Okay, let's take a few more questions here from the audience. Okay, so if Ray is saying, can you do that with Binance Chain? Basically, Binance Chain has kind of been the talk of the week, with Binance smart contract chain having lower fees than Ethereum and Pancake Swap and everything. Are there any plans to maybe consider Binance Smart Chain?
Yeah, absolutely. We've already discussed that internally. We're pursuing that. Nothing to announce or report there yet, but yeah, absolutely. We want to integrate. It's the holy grail, right? For a coin to be on a Binance, but also I think, now that there's another option that's a DEX, right? That's great too. And so that is important for us, right? And like just circling back to the discussion on XMark is the solution for Binance, right? If Binance doesn't have any rebase tokens, and that's a decision they've made, and I can't comment really on why they made that decision so far, but hopefully either they can eventually reach out to us when we're big enough, or take our call when we're big enough, and make us be the first on the centralized Binance application. So that would be great. But Pancake Swap, is a little bit easier of a solution, right? And yes, to answer the question, yes, we're exploring that, and we're exploring all DEX options on other chains right now, and hope to announce some more integrations soon.
All right, great. Jose Nunez says, can you describe again how the portfolio value grows by holding Mark versus altcoins?
So, well, that would be if Mark increased at a greater rate than the other altcoins you're holding. But I think maybe you are circling back to my point that I was trying to make related to holding Mark versus stable coins. So, stable coins, right, are utilized in a lot of DeFi transactions. They're utilized in lending. They're utilized in insurance, and in really anything that DeFi touches, because it's important to have a denomination that what you're going to get back or what you're lending out, and it's just understood. And that's the only way you can calculate fixed rate interest. If you're okay accepting variable rate interest, that's a little less important. But when you calculate or when you hold stable coins, the value is not going to change, right? I mean, if you look at a stable coin pegged to $1, that's always worth $1, and you're going to have the same amount of stable coins in your wallet, because it's not generally supply elastic in the sense of automatically adjusting the supply within your wallet. It may be elastic at the protocol level in that they can issue more, but it's not elastic within your own wallet. And so the point I was trying to make is the Mark token can increase in value even if the price stays very close to the peg. So, for example, the way our market cap increases or decreases is when, well, I'll focus on increasing because that's more positive. But the way the market cap increases is when the price of the token spends an extended period of time above the peg, and we continue to have positive rebases where we inject supply into the market, and that act of rebasing is not enough to keep up with the demand. So to the extent there's excess demand above the rebase algorithm, that's how the protocol grows and how the market cap grows. So let's say our peg's $1.40. If our coin hovers at $1.50 for an extended period of time, that's pretty close to $1.40 in the grand scheme of things. But if that is the way the price action is for a month, you can expect significant growth in the holdings of each individual that holds the Mark token. So whereas if you're $1 stable coin, if you held that for a month, it's always going to be worth $1, and you're always going to have the same amount in your wallet. So I think that's really how this token is more beneficial to hold versus a stable coin if you are okay with the risk, right? The other side of that is a stable coin is never going to go down in value, right? The Mark token could go down in value. So it's just whatever risk profile you're happy with, and whatever you're happy to use your own money on is what you should do.
Yeah, I mean, so the way I view it is, Mark, when you purchase Mark, obviously not investment advice, when you purchase it, you're basically purchasing a percentage of the total supply, and that percentage is fixed, I believe, correct? Right?
That's exactly
Like,
right.
let's say you, right? So while the total supply might go up and down, your ownership, your stake in that is always fixed, right? So in a way, that's kind of how it's giving you that hedging versus risk, right? And the fact that they have a basket of 5 currencies, then also factor in the VIX for volatility. I think that's definitely a good hedge. That's why I myself got in as an investor. Plus, I saw that the market cap was very low. It's been one of the better performing cryptocurrencies in my investment, so I'm definitely very happy about that. But yeah, I mean, I think you guys are definitely doing something very innovative and are basically, in my opinion, a hidden gem. Okay,
Well,
all right.
thank you. Glad to hear that.
Okay, I think let's put you in the hot seat now. So every guest on the show, we like to ask them a few questions to kind of learn more about them. So the first question is, what are 3 actions you took that have changed your life for the better?
Ooh. So I think first thing, let's say, going to college, not because I necessarily valued what I learned. I did value what I learned, but that's only one part of college. But met a lot of people who have been very influential in my life there, and helped me to definitely helped me to grow up. It was a super positive experience for me from a social aspect, and I made a lot of connections that I still have to this day.
Where'd you go to school?
I went to USC, University of Southern California.
Okay.
So yes,
good school.
And I'm in Southern California, so the network is very strong. I would say a second thing would be just not being afraid to take risk. I learned, I've had a stable career. I've been in my career for 14 years. I've been at the same company actually for 14 years. So for a long time, I was somewhat risk averse. It's a financial advisory firm, and when you start do a lot of work with accountants, and you start thinking about accountants and how they're very risk averse, so it kind of just that kind of mindset took over a little too much, and then made a conscious decision to start taking a little more risks financially, and that's been a very good decision. So don't be afraid to take some risks. There's only certain opportunities that come around every once in a while, and if you start thinking about maybe my parents' generation, that a lot of that risk could have been in real estate, right? They were able to make some crazy gains in real estate. Not sure those opportunities still exist for people my generation, and your generation. So I think taking risk is good. Now take responsible risk. And then I would say last one, I recently had a child, so that's obviously transformed my life more than anything else combined. Yeah, thank you. Lost a lot of free time, but it's an amazing experience, and given me a whole new focus on life. So I would say those are some three life changing.
That's awesome.
For me.
As we say here on the show,
we just landed on the moon.
That's on the Lambo. That's on the moon. All right.
Yes.
Next question in the hot seat. What are your 3 favorite books?
Oh man. Well, I don't really read a lot of like fiction or anything like that. So really my interests outside of cryptocurrency and investing are really mostly sports related. So these are all probably sports books. So I would say, The Last Season by Phil Jackson is a cool book if you're into sports. It's Lakers head coach talking about his last season with the Lakers.
Another book, the one where he's talking about like not Tai Chi but like the Zen of basketball?
No, I think that was
Is that a
an
different one?
earlier book, but this is more
Your
just
book? Okay.
chronicling his last season with the Lakers, and Kobe and Shaq and things like that. And then a second book, also Lakers related because they're my favorite team. But I
Laker
like
fan. Hey.
this is more my style. This is a picture book. So there's it's called The Mamba Mentality, and it's a picture book
Yeah,
that was
that
created
was a
by
good
the
one.
photographer for the Lakers for many years. And it's basically all about Kobe, and it's a bunch of cool photos that he took over the years of Kobe, and that was a really cool book. It's a perfect coffee table book. And then another book also basketball related, and this is a UCLA guy, but I'll concede that it's a good book. But John Wooden's Pyramid of Success, I think is a really good book as well.
Nice. So you're a big basketball fan.
Yeah, that's. I used to have a lot more time to actually play basketball, but as you can imagine, playing basketball leagues with a bunch of random guys, licking their hands and touching, it's just, that would be a disaster right now.
Yeah, so actually last year I was in a crypto hoops fantasy league.
Oh, there you
I
go.
mean, people in crypto, they love basketball. And then
Yeah.
I'm saying not now, but during consensus, that actually crypto basketball runs, which is pretty
Nice.
cool. All right. Then next question. Okay, hold on. By the way, if you have any other questions, just keep them coming. We'll get to them towards the end of this stream. Okay. Who are 3 people in history, living or present, who inspire you, besides family and friends?
Well, one's going to be obvious, so I'm going to go back to the Kobe well. I'll say Kobe Bryant for his work ethic.
Black Mamba?
I think unparalleled work ethic. So start there. Also, I think, and this is kind of maybe a cliche crypto answer now, but Michael Saylor has been, just watching him willing to put it all on the line and go all in crypto and just not care at all about what people think. I think that's a really, I respect that a lot. And, it's obviously worked out very well for him and his company. But, I think just him personally being such a positive advocate for the crypto space and Bitcoin more specifically it's really elevated the entire space into a more sophisticated realm. And I think that, it's he's directly responsible probably for getting Elon Musk into Bitcoin. And I think, well, that we know of.
That was huge.
Yeah. And I think that you got to acknowledge his role in all of this has been amazing for everybody in the space. And, I know you said outside of family, but I'll say my dad for the third person. And my dad basically gave 0 F's about anything in life and just kind of lived his life without caring what anybody thought. And so I'd say he's probably my third.
All right. That's awesome. Thank you so much for giving us that insight into you.
Sure.
Okay, let's go to a few questions, then we'll wrap things up here. Okay, so Crypto Cipher 360 says, "Hi, can you go over the staking options once more and the pros and cons of each? Am I correct in thinking it defeats the purpose if I hold and do not stake?" Okay.
Sure.
Yeah.
Yeah, so that's a really good question, and might be a overly detailed answer, but I think it's useful info. So definitely does not. So there's 2 options, right? There's the LP staking, so you can stake your LP tokens, your Uniswap liquidity provider tokens. So we have 3 pools. We have Mark ETH, Mark USDC, and Mark WBTC. So within each of those, you can stake your liquidity provider tokens on Uniswap and earn yield. So 100, 150, 200%, depending on, it's a dynamic formula that adjusts based on how many people are in the pool, what the rewards per block are, et cetera. So it changes. And so that's option one. The benefits of that, of course, are yield, right? You're generating yield with your assets. The risk with that is that there's impermanent loss risk. And I don't necessarily want to get into all the details about impermanent loss, but if a token is increasing very rapidly in one of those pairs relative to the other token, you can experience impermanent loss. And that can be substantial if you're 2, 3, 4xing your portfolio. So there are risks, and that's why you have to offer 100+% yield on this type of staking, because that's the only way to really, that's what the market says is the required return to offset that risk. So to answer your question on that, you're definitely, LP staking is not for everybody. You should know the risks and know what you're getting into. But in times of volatility, those users are also getting all the shares of the fees in the Uniswap pool that are generated from trading. They're getting 0.3% of every trade. That can add up if you have a lot of volume. So it's definitely, I think, people that have a longer term approach and have a more wait and see approach and want to have exposure to multiple assets. Those are the people that should be providing liquidity, not people who are looking to just hold the coin and track their gains and losses, because it's a lot more complicated for doing that. And there's third-party software that can help you track that stuff, that you can plug in your address and it'll calculate all of that for you, like APY Vision or VFAT tools. So there's certain farming tools that can help you with that. That said, if you ask most of our, if not all of our LP providers who have been in that pool for an extended period of time, they would all tell you it's been a very positive experience for them. And part of the other benefit there is your losses during downturns are also mitigated, right? Because half of your assets are in either Ethereum or Bitcoin or USDC. So there's pros and cons. It's just basically going to mute and dampen your gains or losses either way if you're LP providing, as opposed to using all those funds to buy the token itself. So that's option one. Option two is the single asset staking, sub 5% APY. Traditional risk with any staking contract, just that you're depositing into a staking contract, albeit ours is developed based on sushi, so it's obviously very battle tested and we would say very low risk in the grand scheme of things. But there's always risk, protocol risk, and so the rewards there are 5%. But there you get the option to hold X mark. You get the option to use that X mark for governance proposals. If we put anything out to a community vote, you can vote with that token. You can. We're trying to create other liquid markets for that token right now, where people can trade that token. There is a liquidity pool on Uniswap. It's not incentivized by us yet. Hopefully we can develop a market for XMark soon, but that's really the role of XMark there. And that's a more popular, if you look at our TVL right now, I think it's somewhere around 10 million, but 70% of that or so is in the XMark single asset staking, because people are okay with the low APY because it's very low risk. And that is equivalent to the benefits you'll get when the token increases in value, and the losses you'll receive when the token decreases in value are equivalent there than if you were just holding the mark token in your wallet. So it's no different.
Okay. Yeah, I've actually just pulled this up here. Producer, if you could pull up the screen here. So, by the way, I've been staking this as well. I think for me, obviously staking, as he mentioned, or being part of any pools can be risky in terms of impermanent loss. But I think right now with the APY and the yields and being early in a project, especially if you believe this project has long-term staying power, obviously to our customers, you guys and girls have seen all our in-depth code review, which we think this project is definitely a hidden gem in our opinion. And as a result, if you have tokens just kind of laying there doing nothing, I think it makes sense to get at least a small portion of that and put it to use, right, and earn some yield on that. So I've been doing that. I've been doing this, I think, almost for a month now. And I'm definitely a happy camper. And we'll just leave that there.
Yeah.
Okay. All right.
Well, thanks for providing us liquidity. I mean, as everyone hopefully understands, having liquidity is super important to a growing project, and we certainly appreciate everybody who's been doing that.
And if you have any questions in terms of the project, they have a great FAQ page here, right? If you go to benchmarkprotocol.finance, then FAQ, very, very in-depth, well put together. Then if you go to the press, that's where I was. That gives you information in terms of the yield and all that. Okay, let's take a few more questions, then we'll wrap things up. Yeah, so Ernest, hopefully that helps. If you just go to the FAQ section or the press, there's nice documentation in terms of staking and adding liquidity to the pool. Okay, which pair am I staking? I'm staking ETH and Mark, I believe. Not really doing stablecoins at the moment. All right, okay, so any last words to our audience? Anything else you want to cover that we haven't touched on yet?
No, I mean, I think, would welcome everybody to come check us out, join our Telegram. We have an amazing Telegram community, amazing community members, outside of the project, and amazing community managers within our project. So I'm in there. I'm super active. Everybody on the team is in there and is active, and we're always responding and happy to answer questions. I would say for everyone, if they want to learn more, that's the best place to start, is to come there, ask questions, and learn. Second best place would be to read our white paper, light paper, and overview, depending on your attention span. If you can handle a 50, 60-page document, read our white paper. If you want a 4-page document, read our overview. I know there's different people have different preferences with that. I'm more of the middle road there. I'm more of a light paper kind of guy, but we have options for everybody. We're also working on an explainer video right now that'll help everyone understand our platform even further, and would just certainly encourage people to check us out and research us. We're a non-anonymous team. Everybody is there, and we take responsibility for how the project is really perceived. We take, or I shouldn't say responsibility, but we take pride in how the project is viewed, and we are doing our best to make sure that we're exploring all the opportunities we can, and look forward to growing more here in the future.
All right. Thank you so much, Kurt. So someone was asking where to find the Telegram group. It's at the bottom of their site. If you just go to the bottom of the site and click that email message icon, I believe that's Telegram. Yeah, Telegram. Right. Definitely make sure you don't follow any links in the comments. Sometimes, as you guys know, in crypto, there are scams and fake links and fake profiles in there. So always go to official website to get the official platforms. All right. Thank you so much. If you enjoyed this interview, be sure to smash the like button, subscribe, and share this with your friends in crypto. Share this with crypto family. Show them how they can learn more on how to hedge their risk in cryptocurrency investing and even in equities. That being said, thank you so much, Kurt. It was a pleasure, and we'll see you all next time. Have a great time. Bye.
Thanks.
Life-changing money, to a point where you can buy your mom and dad a brand new house, right? You can pay off your college loans. You can invest in your future, not have to work again. Pursue your dreams, your passion, not have to have a job, work that 9-to-5 grind, right? Break the system, hack the system. This is what this show is all about.
They said relax but never retire. Feeling detached, never inspired. They told me relax but I can't retire. I'm feeling detached, never inspired. Like I would live on but never alive. You know the system, AM till 5. They try to say our jobs and give on. Living a lie. Now here's the mission, die or decide. You would die. The corporate life is so redundant when your freedom isn't free. It comes to being someone, just believe that you can be. And how can I have hunger when they tell me when to eat? How can I lead others when they tell me who to meet? Then they tell me when to come and then they tell me when to leave. They say how much to give and then forget how much I need. It's the precious to succeed with the lessons of the greed. I question who to be and saw this messages in me. I gotta know.
Life-changing money.
I wanna work for myself, I gotta work for myself, I gotta go.
You can invest in your future,
Bring
not have to work
spirits to
again.
the moon, put nerves on the shelf, I gotta know.
Pursue your dreams, your passion.
I want to stay free or want the safety. I gotta go.
Break the system, hack the system.
Although they paid me,
this is what the
they
show's
never
all
made
about.
me. I wanna relax, forever retire. I wanna detach, I'm feeling inspired. They told me relax, but I can't retire. I gotta detach, gotta decide. They got me thinking I would live on, but never rely. You know the system, AM till 5. They try to say a job's a give on, they living a lie. Now here's the mission, die or decide. You or die now. Hey, hey, I will never be a wage slave. I gotta stay made. Hey, 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 I used to see this in the 8th grade. Wasn't a day late. Hey, 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 I found the love that I was seeking, life that I'm leading. Hey, 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 now I can do this every weekend, cause I'm a free man. I was in Tokyo, riding the job wheel, the rodeo, dancing with the devil for payment. I couldn't do-si-do, but I was driven. The mission gave me an open road. Made a decision to whip him like it's a motor show. 6-figure slave, I was paid, wasn't well though. Heard of crypto underground, it became my railroad. Started making earnest money, it's for whom the bell tolls. Went from wishing for sales closed to sales. Now I can relax, forever retire. Now I'm detached, forever inspired. Now I can relax, forever retire. I had to detach, had to decide. And now I'm thinking I can live on and not just survive. You know this system, AM till 5. They try to say a job's a give on, they living a lie. I made a mission, die or decide. Do or die now, crypto retirement, yeah, that's where my mind went. Started thinking higher, now they can't hire my time spent. No, not retire like 65 when your job ends. More like an island, and if I'm by it, I buy it. Free travel, dealership, sweet dabble. I reign like Leeds Castle, you reign like Seattle. We went from sheep cattle to eating beef and mackerel at feasts. No lassos, just beliefs me in a saddle. You gotta know.
Like life-changing, like
you wanna work for yourself, you gotta work for yourself, you gotta go.
not have to work again.
Raise spirits to the moon, put nerves on the shelf, you gotta know.
Pursue your dreams, your passion.
You wanna stay free or want the safety, you gotta go.
This is what the show is all about.
Although they paid you, they never made you. No, we can relax, forever retire. Now we detach, forever inspired. Now we can relax, forever retire. We had to detach, had to decide. And now we know that we can live on and not just survive. We left the system, AM till 5. They try to say our job's a give on, they live in a lie. We made a mission, die or decide. Do or die now.
I'm here to put you guys on and share all the different resources and tips I come across in my journey to making $1 million and making $1 billion, right? I'm trying to share this with the world for free. I'm not here to sell you some $2,000 course, ebook, webinar, whatever, right? I'm here to put you guys on the game for free, open source, right? The same model as blockchain, Bitcoin, or these cryptocurrencies. I'm here to share everything with you guys.
Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at Tokenmetrics.com.